Cory, what gives? Why the whiplash to Netflix?
Well, look, I think Netflix better defines the market over the last really year and a half and the last few days than any other equity out there, because it really shows you, look, Netflix led the way down. If you look at what happened to the stock today, of course, it's showing you what the rest of the market was doing, which is really responding from yesterday. Netflix and China have very little to do with each other, and yet you see this rise in the stock today with the hope that maybe China can fix things in the global economy. But if you look at it longer term, what you saw was Netflix really led the way down. It was the biggest loser on Thursday. It was the biggest loser on Friday. It was a big loser yesterday. And yet it was the best performing stock in the S&P over the course of the last year. And I think it really defines the market better than any other stock out there.
Well, Cory, can you explain what is this new business model that Netflix is portraying?
Yeah, I mean, if you look at what Netflix did about a year ago, I think that Netflix took a look at what the stock market was rewarding. They had this Amazon envy that goes throughout Silicon Valley, which is, why can't we be like Amazon, have no profits, have no free cash flow to speak of, and put it all back into the business? And so they decided to do just that. They changed their business model. You can see it in the amount of money they're spending on new content. You've seen shows like Daredevil, which has cost them, great fortunes, and Marco Polo, other shows they've spent a lot of money on to try to grow in content, even though they're very expensive. And indeed, you saw this business go profit-free. But I think maybe more importantly, if you look at their marketing expenses, the percentage of revenues, you can see the change in their business model. The marketing pedal to the metal, where they increased marketing spending, they went into international markets, and they spent a lot of money on content. Profits be damned.
Cory, how exactly did that work? Did raising market expenses grow the company?
So the increase in marketing expenses, the increase in cost of content, which doesn't really show up in the income statement because they capitalize that on their cash flow statement and their balance sheet, which is a little odd, it seems to me. But anyway, that's what they do. It's perfectly legit accounting-wise. But I think it showed a real change in the way they were going to approach their business. And what happened? The stock responded. You went from the doldrums of a previous year to the best performing stock in all the S&P because the bull market wanted top-line growth and didn't care about bottom line. The open question is not only will we ever not be in a bull market, because someday we will not be in a bull market, but can Netflix then, after making this business change, which led to a big rise in the stock in 2015, can they make another business change, pull back on marketing, lower their content costs, even though they have more competitors than they've ever had, and somehow become a profitable and free cash flow generating company? That's the open question. It's something they haven't really shown a great ability to do, particularly after they've effected this big business change in the last year, perhaps to respond to the market. Interesting.
And clearly Netflix at the whim of the market. I take your point that perhaps it reflects sentiment, but it can't really be, the best reflection of the overall market because Netflix year to date has still doubled and the S&P is down a couple of percentage points.
It's at the market's most extremes. It's the biggest winner and the biggest loser at any given moment, but it certainly reflects an amplified version of the market.